let me start by asking, it does appear that from Africa to the Middle East, the challenge of insurance awareness and penetration runs through almost every region. But I just want to sample your thoughts. What do you think is responsible for this?
I think there are many aspects to it, especially when we think of penetration in terms of amount of people buying insurance. We have to look at the incomes in the region and people, because people buy insurance for the need, and if they don't have money to spend on an insurance product, then they will not purchase the insurance product. So, and also matter of awareness. So people usually don't look at insurance as a necessity, how critical it is for them to have a life insurance, because it is very difficult to think about death, let's say, because the life insurance is all about something that happens to your family or your loved ones if you are not there. So first of all, the thinking about the death and the consequence of the death is a difficult thing. But also people think that it will not happen and something happens. So there is a bit of hesitation in going and buying insurance. And then also there is a function that products in the markets have to match the needs of the market. So for example, in places where people don't have a very high income, their products have to be made in such a way that people can afford it. And we have to see what are their immediate concerns in case of an unforeseen event happens. That's where the challenge for insurance companies are, for insurance markets are. Generally, insurance is a function of how much people are aware and how much you make them aware of what insurance can do. And I think insurance companies generally are not very good at marketing themselves. They rely on a traditional distribution models whereby people go and sell insurance products. They don't rely much on the marketing of the product, on education of a consumer to understand what product can do for them. And I think these are a few fundamental reasons. So some reasons are predominantly related to the economics and disposable income of the person. And then there is a bit of a lack of effort on part of insurance companies to market the insurance products properly and making consumer aware about the benefit of insurance.
Okay, now, Mr. Siddiq, you did mention the parts that the insurance companies are not playing very well, and that is also a challenge in most regions of the world. Insurance operators are not readily willing to go out to say, this is what we sell, these are the benefits, these are they're just close-knitted. They don't want to go out to say. But that aside, you talked about life insurance. Oftentimes it's still the same narrative, even in Africa where I come from. When you mention life insurance, what automatically comes to people is, oh, I don't want to die. But the truth is, life insurance is not just all about death. How come insurance operators are not able to pass across that message on life insurance that, oh, guys, when you buy life insurance, it doesn't mean you're dying. There are actually other aspects of life insurance that you can benefit even whilst you're living.
See, this all goes to consumer education. The more we educate consumer in terms of the benefit of the insurance and explain the product in a detail. So for example, life insurance, simple life insurance will say, will cover in the event of death. But life insurance might cover in case of critical illness, might cover in case of disability and all that. And if consumer education is not there and understanding is not there, then consumer will not buy the product. So fundamental question is approaching the customer, putting an effort to educate the customer in terms of what he needs to buy, and also matching the product to the consumer need. So every consumer doesn't need everything.
Sure.
Right? So for example, if I want to sell you life insurance, I have to match the product to your profile or to your need, and then it will become relevant to you. Right? And this sometimes requires properly trained people who can sit with somebody, who can understand his needs properly, and then propose a product that will meet his demand. Which then fundamentally takes us to the other question, that manpower in the insurance company, especially on the selling side, has to be trained. Has to be trained in such a way that they can sit and talk to a customer and explain to him what are the benefits, understand customer need, and design a product or propose a product which matches his requirement. And that is also an important aspect of insurance business. So training of manpower is critical, explaining the product is critical, plus building the trust of a customer. So the customer has to trust that insurance company would be there when it would be required. And particularly, especially in a life insurance context, sometimes that person is not there who's buying insurance.
Yeah, exactly.
So that faith has to come, so that trust has to come, and that's very important. And that really creates sometimes hesitation in buying insurance. So the credibility of the insurance company, the financial strength of the insurance company play a very important role. So people have to start thinking that if I'm going to buy this product, will this company would be there when I will need, which may be 10 years down the line, 15 years down the line. And that's very important. So that's why regulators also focus on making sure that insurance companies have adequate capital, they are solvent. These things also play a very important role in the development of the industry.
Okay, now, Mr. Siddiq, you did mention something now, and I'm going to take you to the third part of this interview. We've seen that over the years, the traditional way of distributing insurance products and services has not given us, let me not say us, has not given the insurance industry the needed results in terms of penetration and sales. And now we hear so much talk about technology, artificial intelligence, telematics, and the likes of it. In your opinion, do you think these innovations that are coming, InsurTech, will change the paradigm of insurance distribution?
You see, technology is an enabler. So technology itself cannot change the structure of the insurance business. What technology does is that it allows you to access the market in a different manner. So for example, today, I can have a customer who can do a lot of work on a mobile app or on a website. And through that, I can filter a lot of information and provide him a lot of information. And to some extent, I can probably give him the product, but the product has to be designed in such a way that is completely parameter driven. So there are products which are completely parameter driven. There are products which are not parameter driven, right? And parameter driven products are mostly suited for online selling and things like that. Products which are not parameter driven, it's difficult to sell. But yes, in accessing the customer, the ability of insurance company to approach the customer is considerably increased through technology. So everybody has a cell phone today in his pocket, right? So if you make information available, a lot of education part of a customer can be done. A lot of preliminary screening for the customer can be done through mobile app. And he can then be directed at a proper point. Or if it is a very simple product and completely parameterized and easy to sell, a person can buy it. Also, technologies allow us to do one more thing, which is basically allow us to create a structure whereby a premium payment can be deferred slowly. So person can pay premium slowly. So we might allow a person to pay even weekly, might allow even to pay him daily without having a large significant cost. Before, these structures we used to incur a lot of cost if you want to do transactions on a daily basis. But with mobile and things like that, these transactions can be done very quickly, which allows to make it easy for a customer to buy insurance. And that's where the technology plays an important role. So it enables us to access the market. It allows us to give a customer standardized, parameterized products. It gives us facility to allow customer to have an ease in making the payments for the insurance, right? And affordability. So that person can say, okay, today I don't want to pay, this week I don't want to pay, but I will pay 2 weeks together next week. Fine. With the technology and everything, I can do that. So this is how the technology will help the market.
Okay, Mr. Siddiq, to what extent would you say that the insurance industry is really ready to embrace technology to
I
enable
think
your
the insurance
business?
industry is generally not an industry which embraces technology very quickly. And that's a fact. But what insurance industry is also seeing that they might miss the opportunities if they don't do that. So now, slowly, insurance industry is moving towards technology. And challenge for the insurance industry is that end of the day, insurance is a contract. And when we make the contract, we have to have a lot of legal constraints that we need to make. For example, we need to identify the customer properly from a customer identification point of view. Customer has to understand that what he is legally signing in terms of the contract. So all these things slightly hamper insurance industry. But I think insurance industry also realizing that without now this, the survival of insurance industry
Is at stake.
So I think the technology will force itself on insurance industry, and we will have to embrace it and take it and work with it. But I think industry is moving in a direction, and I think a lot of work is going into simplifying the contracts, making it easier for people to understand it, making them more transparent so that people know exactly what they are buying, explaining them.
Okay, Mr. Siddiq, when it's funny when I sit down and I talk to insurance practitioners like you, and you people make it sound like insurance is so difficult, but all of a sudden, the Amazons of this world, they are beginning to sell insurance in the U.S. So how are they doing it?
No, but that's what I'm saying. That eventually, whoever is going to do this will have to go through and overcome these issues. For example, identification of customer. So Amazon has identified customers through the transactions, right?
Yeah.
Knowing what customer is buying into. So explaining the contract. Eventually, in US, for example, a lot of work happens now. All the contracts mostly are signed digitally.
Yeah.
So when you're buying anything, even you're buying a house, you literally hardly sign a contract with paper. You sign everything digitally. So there is an enabling mechanism, legal mechanism, which allows us to do that. And also, for example, in Middle Eastern regions, now we are getting legal mechanisms coming in which will facilitate all that. So there is a legal framework which supports this growth. So if I can sign contracts digitally and legally they are honored, I'm okay. Right? But for example, in the market I'm operating for, let's say, not necessarily U.A.E, but any market, if the contract is not digitally allowed, the digital contract is not recognized in the courts, that becomes a problem. So it's combination of everything. That it's technology, the legal framework underpinning the technology, the contracts and the systems, all has to come together. Then only these things can happen. And that's why these things take time.